Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Good morning, everyone. Welcome back to another live stream. Today, we have an action-packed stream ready for you. We've got some guests coming on. We've got some news to react to. Core PCE drops in about just about 10, 11 minutes here now. So that is likely to move the markets. We do also have the U of M consumer sentiment. The revised number comes out at 10 a.m. U.S. Eastern. And we also have to react to some of the news that came out earlier this morning out of Europe. We had core CPI and CPI flash estimates come from Europe. This gives us an insight as to what inflation is looking like over across the pond. And newsflash, it is actually showing heavy signs of cooling. Now, why does that matter to you and I? Again, I think when we talk about retail traders on average browsing YouTube, most people don't really dive into the macro stuff. They don't get into the economic numbers. They just see, oh, red folder, it's going to move a lot. And that's about the extent to they go. But understanding the story of what these numbers are telling us is eye-opening, to say the very least. So let me walk you through what this number is, and then we'll jump into some charts to prepare for core PCE, which will likely move the markets in just about 10 minutes. Okay, so CPI numbers, core and headline out of Europe, cooling. Very, very much so. That is a ginormous, significant difference. Core CPI was expected to be 4.8%, and what we got here is 4.5%. That is a pretty substantial difference, and it shows a lot of inflation is cooling over there. Now, this is still elevated from the US's 3.7%, but regardless, it is a meaningful decline from where it currently or was previously. So this backs up that the ECB may very well be serious about their dovish tones. Now, if you're newer to trading or you're newer to the fundamental side of trading, what does that mean? What is hawkish tone, dovish tone? What are all these acronyms and sayings, Nick? Well, the central bank in Europe, the ECB, they have so much power. The reason those folders are red is not just for the fun of forex traders that are new to trading. The reason those folders are red is because it has serious implications to everyone, traders and non-traders alike. It dictates heavily the decision-making process that the ECB, the European Central Bank, may be set to do next. And if they see cooling inflation, what that tells you is that the central bank in Europe might say, hey, I think that we might not need to raise rates, or we might need to cut rates at some point sooner than what was expected. So that has me, as you know, if you're even mildly familiar with fundamentals, cutting rates is generally very bearish for the currency. Now, when we talk about the European Central Bank, the euro is rising, and yet here you go. You got the ECB cooling inflation, likely to continue its dovish path. My opinion, pullbacks here on the 618% retracement, that's probably where I look to get short on the euro USD on a technical basis. So now we've highlighted the fundamentals, right? Declining inflation as the central bank in Europe kind of wanted to see, and then also a dovish tone out of the ECB as well. Combine those two things, there you go. You got a bearish case scenario, in my personal opinion, on the euro. Guess what else found out that the euro looked bearish weeks ago? The EDGEFINDER. The EDGEFINDER has been super bearish on the euro and the pound against the US dollar. And if you caught this move, then shout out to you. I did something in my recent video. I asked people, hey, did you catch some of the dollar bullishness? If you have the Edge Finder, speak up. And a ton of people were like, yeah, I did. I caught some dollar bullishness. So shout out to you guys who caught it with the Edge Finder as well. Quick plug for the Edge Finder. If you don't know what it is, the Edge Finder is a software that helps traders who want to know more about fundamentals. They want to learn fundamentals and they want to incorporate fundamentals. They acknowledge that the market does not move based off squiggly lines and trend lines. Nothing to say that technical analysis is not valuable. It certainly is, but that's not what really drives the markets. What drives the markets is the real world implications of what's happening. And that is fundamentals. So the Edge Finder is our attempt to take this economic data that we're getting from these places, like we're about to react. All these red folders, they have major impacts, but you can't possibly just weigh them all in your head as to what's going to do everything next. So what we've done is we've built the Edge Finder, which incorporates these numbers for you and generates biases on different assets. So I'll give you some examples. Recently, the Edge Finder has been bearish on the euro and bearish on the pound. And that is off of kind of like the 4-hour daily chart. That's kind of what the Edge Finder is poised for, but it's still great for day traders who want to use that bias and bring it down with them to the lower time frames. It's also been bearish on gold, which if you've been in the live room with us for a while, Frank is super short gold. Actually, I think he got trailed out for a profit. He eventually closed out of the gold shorts. Let's actually look, get a little bit of an update. He closed out shorts after this big tank. He trailed a stop and I think was taken out for a significant profit. He shorted it from 1925, guys. So all that to say, we genuinely use the software that we promote on our streams here. This is a software that we've built for the last year and a half, almost coming up to, well, not quite 2 years, but about a year and a half. We've been working on this software. And the goal of it is, again, to bring in macroeconomic figures, interpret them, and help traders use them in their everyday analysis. If this is something that you've watched on the channel for a while and you're like, I would like a copy, I've got something cool for you today. We've got 355 people in here. It is a core PCE stream. We've got that number coming out in 5 minutes. We are going to do something unique. We have not done this in a while, and we're going to do it again. So we're going to do a 50% off stream sale. So if you're somebody who is interested in the Edge Finder and you're a stream viewer, we really appreciate you guys. And to show our appreciation, we're going to do this very short-term, one-off, very, very inexpensive copies of Edge Finder available stream sale. So if you want access to the stream sale for 50% off the Edge Finder, which is a major discount that we will not go any lower than that. That is the lowest price we can offer on the tool just to cover our own costs. This stuff is expensive to run. If you would like a copy of the tool for 50% off, here's how to do it. Click the link in the chat. This will take you to our support center and let them know you want to take advantage of the 50% off sale, and we'll get you set up with a copy for a major streamer discount. So there you go. Yeah, 50% off. It is very short term, so only for the duration of this stream, and then it's closing back up. Guys, we've got core PCE coming out in 3.5 minutes, which should be market moving. Now, this is going to move dollar crosses. It's going to move oil, gold. It's going to move the indices. It's going to move all sorts of stuff. Now, why does core PCE matter? Well, core PCE is a measurement of inflation. So just like we discussed, Europe being impactful and important here with these cooling inflation numbers, will the US see something similar, right? Again, three minutes to go. Core PCE index will give us an idea as to what the consumer inflation is really looking like. And something you guys should know about this, we do CPI streams, and CPI streams get 1,000 people in here. It gets crazy. But this number, for those of you who are here with me right now, this number is, to the Federal Reserve, even more valuable. They have said, and Jerome Powell has said many times, that core PCE price index is their preferred measurement of inflation, as it really focuses heavily on the consumer. You and I walking into the store, right? So they pay close attention to this number. So we should pay close attention to this number. This number is going to give us insights as to what the Fed is seeing on the inflation table and what they might be likely to do next. So we will watch that number as it comes out. And again, that is about 2 minutes away. Let's talk a little bit about gold. Gold has slooped down pretty hard here ahead of core PCE. And we do have, again, we had GDP numbers that came out yesterday. And despite some cooling in the economy, it wasn't enough to get gold off the lows. In fact, it sold off anyways. And so, that US dollar is very, very strong. I'm going to be honest with you guys, bearish on gold until further notice for me. If I'm looking at this and I see this pullback, right, if this price jumps today, there may be, in my view, an opportunity to possibly rejoin that short trade that Frank was in for this duration here. He caught that move inside of VIP. I was super jealous. And now I'm seeing if I can catch my own wave if we do get that pullback to that 38.2, which lines up nicely with past support. Yeah. So that is where I am paying attention to. Gold, probably, if it does decide to pull back. Let's pivot just for a moment on indices. Indices have to prove themselves here, guys. We have a major level of support that was broken just days ago. This is a daily chart on the S&P 500. That is, of course, the U.S. stock exchange or stock market. And what you can see here is that we are approaching now a level of what was support that could turn resistance. Be very careful as we approach this number because, again, we need to see buyers prove themselves. Anyways, let me come back to this thought in just a little bit more detail in just a moment, as we do have core PCE on the horizon. So we're coming in very hot to this number. I just want to remind you guys, don't go anywhere after core PCE. A lot of times people leave right after the numbers, which I never understand, because the real interesting parts of the stream are after we get numbers and we can actually look for trade setups. So stick around with me, and we're going to do that here together. We've got 15 seconds to go, guys. So let's go ahead and hit our breaking news on the screen. All right, guys. So we are coming in here now to core PCE. And let's see if we get any volatility. The S&P just shot up a little bit. Gold also making a move higher. Let's see, core PCE numbers coming out, the dollar down. That would perhaps suggest that there was some cooling in the inflationary department. Let's see, though, because it is a bit early to tell. Gold is shooting up, right? Making a move from, the 1867 up to 1872, 1873. That's meaningful. The S&P 500 continues its march higher back to that resistance point that I just mentioned to you. And let's see what we get for the numbers, guys. There it is, guys. We had core PCE, as expected, as I was mentioning, probably some cooling. We had some cooling, 0.1% compared to the 0.2% month over month. Now, that may not seem like a lot, but any victory in the inflation department for the Fed perhaps suggests that there could be some relief on this dollar bullishness. So if you're somebody who's like, I want to see some dollar weakness come in, well, look to the numbers, because that's what the Fed is doing. And as long as that Fed is, appeased by perhaps some cooling inflation numbers, it could lead to some dollar weakness. However, this number doesn't seem to be really incredibly market moving. We do also have GDP numbers out of Canada. So we had month over month come out 0% compared to 0.1% expected. And so putting that into perspective, that is something, if you're a CAD trader, that could perhaps suggest a little bit of CAD weakness there. But the core PC number is going to be probably where I'm more fixated on. Again, it initially shot the dollar down, but it has recovered those losses pretty quick, just showing right now the resiliency of that US dollar. Benjamin said, hi, Nick. I presume you got trailed out for a profit on oil yesterday. Do you have any thoughts on re-entry? I got in at 92 on WTI with oil trade held since yesterday. Benjamin, thank you for tuning into the show. And I'll say this about oil. I got out of my trade. I did end up taking profits. Price did pull back. So I'll just pull up oil for just a moment with you. So oil pulled back to basically... Let me redraw where I was. So I put a stop below this structure low. And of course, my entry was quite literally, it looks so textbook. I bought on this support level. So I ended up taking this trade from here, rode that baby all the way through the highs, which was amazing, right? I can't deny that felt Really nice to see a trade finally really work out in my favor. This ended up being a multiple risk to reward win for me. I think it was at one point like 8 risk to reward, right? Like, so I risked, let's say I risked 100, it was up like 800. But in my case, I think I closed out final profits for about $1,600. At one point, I have to say it was up like 2,800. So that didn't feel too good, but that's what you get with trailing stops. Sometimes you just take what you can get. So I ended up trailing my stop out here. And so as it kind of makes its move higher again, I am potentially interested in a re-entry, but it might have to be kind of waiting for that pullback. So I'm not at like a re-entry, like, oh, let's go long here. Like I'm not in a trade prep mode. It's kind of far away from a trade entry. For me, it might be like a pullback. If it does double back, maybe I can look to rejoin the trade. Nothing wrong with looking for the re-entry after getting trailed out, especially if the trade is there again, right? I mean, I'm still bullish on oil. It's still on the EDGEFINDER as a bullish asset pair. I'm sorry, bullish chart. And speaking of which, things have shifted a little bit on the EDGEFINDER. Let's take a look at the latest here, guys, in terms of analysis. Let's make sure we refresh the data here. So what we've got is we've got some dollar bullishness still. Of course, that stubbornly remains to be the case. We also have US oil as a bullish call out. And I'm still pretty bearish on indices. Now, I will say this, I've said it before, and I'll say it again. I don't really like to short the indices. It's a very hard trade. The thing goes up over time. So that's you're working against, the inverse gravity that is the US indices over the longer term. But what this does tell me is that if the EDGEFINDER is being bearish on indices, well, first of all, had you been on shorts recently, you've probably done very, very well for yourself. I mean, here's the S&P 500, the NASDAQ, even better. If you were short on these things, then you had probably some phenomenal trades. And the EDGEFINDER got bearish weeks ago. So, it's been a nice, the EDGEFINDER, by the way, we've recently done some score tweakings on the algorithm. So behind the scenes for a moment, the way this works, economic data, if you guys are here for fundamentals every day, it's a lot of work. You can see, I am featured on a podcast, the Market Insights Market Pulse podcast. I go on there. I contribute, or I work with several different traders who come on the show here, many macro fundamental traders. We are debating and researching and discussing this stuff all day long. It's a ton of work. And I understand that from a retail trader who maybe, I'm a retail trader. I do this every day. This is my living, right? I'm trading. This is what I do for money. This is what I do every day. I also am a commenter, a speaker, an analyst. So I'm also doing that as part of my day job kind of thing. I contribute in that regard. And so what I do is I need help. Even with my full-time paying attention to fundamentals, we needed help. I had no possible way of sourcing all that data in reading through it every single day. It would take me hours upon hours just to do the research. So we built this tool. This tool is, again, the whole purpose is to take in macro data and interpret it for me to reduce the workload. So if you're somebody who works a job or you have other things going on in your life, maybe you're a parent, maybe you're a student, maybe you're whatever, right? Maybe you have work. Everybody has stuff going on. So to me, it's like, if I can use software to reduce my workload, but still use fundamentals, which I know are like the most powerful thing in my trading, that's my sweet spot. I'm a macro trader. As a macro trader, I need that data. I need that insight, that bias, that confirmation bias in my trading. So again, that's why we have so many people who have copies of the EDGEFINDER, and that's why it's such a long project for us. We're constantly improving it. But anyways, point to say, we recently revamped a lot of the scoring algorithms. We re-looked at commitment of traders data. We got ourselves more involved in the recent filings. I'll show you something really interesting, guys. If you haven't seen the COT data this week, oh my gosh, if you missed it, let's go through it really quick. COT data, right? We revamped, we reprogrammed the algorithm that we're using to interpret this data. And I'll show you how it works. First, we look at what the institutional money is overall, their net positioning, right? Anything from the New Zealand dollar, the Aussie dollar, the Canadian dollar, the yen, the gold market, US dollar, US oil. We have all these assets, right? we have to look at where institutions are buying and selling. We want to track that data. We want to see what hedge funds, do they have a bullish bias on the US dollar? Do they have a bearish bias on the yen? We can see that data in the net positioning. And that's the first half. This is how we used to score. We only did COT net positioning. And this one's pretty straightforward. If institutional money is really short on New Zealand dollar or US 30 or JPY, we're going to be short biased. But on the other side, if the gold market has a lot of bullishness in US dollar, we're going to be more bullish. This is pretty straightforward. This first half is pretty straightforward for traders. The second half, which has been brilliantly worked on by Frank and our developer, as well as with my help as well, we have actually now taken a look into the latest filings. And every time we get a filing from the Commitment of Traders data, every time we see what hedge funds are up to, we have a software that automatically brings in all this data and interprets it in the simplest format. So I'll show you. Here's the US dollar, right? The US dollar, as of the last week, we have all this data, the number of long contracts, the change in longs from the previous week, short contracts, change in short contracts from the previous week. We have all that data. We've added this column on the far right to help us interpret it even further. This contributes to the EDGEFINDER's scoring. So check this out. When we look at the US dollar and we have 16% change in a week, which is massive, we had a ginormous shift into the US dollar on a net long basis in the last reporting. That has kept us very bullish in the dollar. Knowing this information and factoring it into our analysis could have kept us out of dollar shorts. If you were dollar short this week, again, we had every signal to not be dollar short based on the COT data, based on the economic figures that we track, so on and so forth. The EDGEFINDER has been very right about the US dollar in the last several weeks. So my point with that is that you can also take a look at things like, the S&P 500 or the NASDAQ, which has also seen pretty hefty sell-offs in the last COT data report. So the EDGEFINDER, what it does is it takes in all this data and then it goes back to the top setups and it scores this in the algorithm and gives us bias. So that's the whole idea behind the software. The reason I just did that breakdown is I mentioned this earlier, but I'll say it one more time. If you guys are not already EDGEFINDER users, but you want to be, we are doing for this stream only a 50% off stream sale. So if you're somebody who has been watching for a while and you want a copy, we do plan on having our prices increase over time. We have some great new features that are coming out, and with that, some price increases. So if you're somebody who's thinking about it, get your copy today. Send us a direct message. Here's how you can do it. We'll drop the link. Click this, have a conversation with someone on our staff and ask them for 50% off. And someone from our team will get you hooked up with a copy. I know I went heavy on that, and I apologize. If you've already heard all about the EDGEFINDER, you're like, Nick, get back to the charts. I apologize. It's a product we are really proud of and we worked really hard on. So it's an amazing feature. It's an amazing tool that has, a community of people working on it behind the scenes. And, so we're proud of it. Anyways, the indices continue to march higher here, guys. NASDAQ up 0.85 on the day, percent that is. This is still a market that has really struggled. Consumer demand is down. Here in the US, people with student loans, student loans have resumed. So that has kind of hurt the consumer, right? So student loan interest was postponed here in the United States for quite some time. With the resumption of that, US consumers are getting hurt, right? A lot of people who have their student loans back on their, budgeting sheets, it makes it hard for things. I mean, my wife is finishing her payments on her student loans, and she's getting closer. But again, the thing is, right, everybody's interest was postponed as an effort to kind of continue to stimulate the economy during all the COVID stuff. Well, consumers are back on the hook with having to pay their interest down. So that is kind of been reintroduced. Anyways, indices struggling with some of that, as well as the Fed's kind of hawkish hold that they put out recently. So fundamentally, indices are right where I think they need to be. For me, they are bearish until further notice, right? Will I be bullish again? Absolutely. They're one of my favorite things to be bullish on when I can find the reasons to do so, when we get the right scoring, right? Is the EDGEFINDER web-based? Yes, it is. The EDGEFINDER is web-based, so you can access it from your phone, from your multiple computers. You don't have to like install it. It is literally like a 2-second setup. You just get your license, and then we add you, and then you're good. And then you can access it from anywhere. What programming language is the EDGEFINDER built with? A couple different ones, but it's a lot of Google-based stuff. Anyways, yeah, so back to currency side of things for a second. The dollar yen has been a monster recently, but I want to warn you guys about something. We're approaching the 150 mark, and while I am still overall bullish on dollar yen, 150 is notoriously Japan's area of discomfort. Several times, the Japanese currency intervention stuff has happened around the 150 mark. It is clear that the Bank of Japan does not like the currency exchange getting that extreme. So is there possibility that Japanese intervention could come back into play? The previous times that we've seen that, they have led to some downturns in the dollar yen. So we are approaching that level. So be very careful on the bullish side. I will say that, am I still bullish overall? I actually am. I don't necessarily think that just because the Bank of Japan may, try and intervene again, that the dollar yen can't go higher, especially all the factors, the rising, 2-year yields here in the US. Generally speaking, I am still pretty bullish on dollar yen, but it's not my favorite trade right now. I mentioned that some of my more favorite trades, I'm still bullish oil, looking for another chance to try and grab this one. I made some pretty good money on this one. I mentioned earlier, closed about $1,600 in profit, trading this thing from down here up to here, trailed my stop, and unfortunately taken out for much less than what I was floating, but still a winning trade nonetheless. So you can't complain. Anyways, guys, we're going to take a quick break here. We're going to thank our sponsors, and we're going to come back and talk to Kenzo. He is coming in from Extra Hot Forex here on YouTube. We're going to have him do a little bit of collab and take a look at some charts here together. So stick around. We'll be right back with Kenzo right after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
Hey Kenzo, welcome back to the show. And Kenzo, you're here every week, so it's good to have you back on. How you doing, man?
I'm doing great, and you?
Doing good, and plenty to talk about here this week. You've got a gold chart pulled up here. What are you looking at, and what's your thoughts on gold? Let's start there.
Actually, on gold, not only on gold, the dollar is getting stronger and stronger. So since last week, things were actually in favor of the dollar. So everything, actually, it was all about selling. Everything's just downtrending, especially against the dollar. So yeah, I was just looking at that. You can see, but it's been here for quite some time. That we are see that now the market is creating a very nice downtrend. So I think a continuation of this, especially when they say, I don't know if maybe you heard that they can still increase twice actually next year. So actually that makes the dollar to be way too stronger, even if they did not really increase the rates now, but just because they still have a chance to increase twice, that it's something else. So yeah, I'm actually bearish on gold. So until I see something change.
Yeah, I think that's a fair conclusion. I mean, at the end of the day, you have lots of central banks backing off their hawkish tone, and yet the central bank here in the U.S. continues to be serious about their higher for longer stanza, and it makes sense. I mean, there's a lot of stuff here that kind of has to change in terms of what the Fed wants to see. They're worried about sustained inflation for a significant period of time, which can lead to a lot of trouble. I mean, the unemployment rate here in the United States is still very low. People are, we have still a very tight labor market, and, house prices continue to be on the rise. And there's many inflationary factors that are stubborn. And until they kind of crack, that dollar does not look like it wants to weaken anytime soon. I like your chart here. You can clearly see pulling back now. Is this, do you think this is an opportunity to get back in on the dollar?
Yeah, I think dollar index shows us that we are actually still on a very aggressive bullish moment. If I go on a weekly, let me just try weekly, maybe we'll see that. So on a weekly, or I think daily is going to be fine, we will see that actually we are on an area where it was like very, very strong. It was a stronger resistance if you check here, because we also did have the market at times. I don't know if maybe my connection is fast. I don't know if you can hear me, but
I think we're having a little bit of technical issues, Kenzo. I'm sorry. I think your mic is cutting in and out. I can see your screen, but your camera goes in and out a little bit. I think I can hear you now. If you keep going, I'll let you know if it works okay.
Okay, yeah. So if you check on the screen, we had this for quite some time now, and now the dollar just broke out of that. So that shows that we're actually on a very strong bullish momentum, unless if maybe the market doesn't really respect this. If the market doesn't really respect this resistance, pushing lower, then we can say maybe things will change for now. But it seems like it's way too strong. And maybe the market is just trying to retest before pushing to the upside. It's possible to see the little but that out there. It was like seriously stronger, but I'm expecting a retest. So yeah, that's why if you check other pairs, they actually follow the same route. So they are all selling, especially against the dollar, as it's actually very, very strong. So yeah, such as NASDAQ and US statistics, they also doing the same. So they are actually suffering from that.
Sure, Kenzo, I might have to ask you to come back at another point. I think for some reason the connection is a little bit slow still. We're getting some like cut in and out of the audio, and the camera's a little bit slow. So what I'll do here is we'll say goodbye to you for now.
I think.
Sure.
No, I think it's when I share the screen. I don't know if maybe it's StreamYard or something. When I share, it comes so slower, but if I stop that, it comes much better.
Oh, okay. Well, yeah, now I can hear you and see you fine. So maybe we'll for a little bit just stick to my screen then, and we can talk a little bit about that. I was actually able to catch most of what you were saying about the dollar index, and I generally agree. You mentioned that weekly chart level, the huge, longer term level that the dollar index seems to have been able to conquer, right? We've broken out of this. Now, granted, we are seeing a pretty good sized pullback here intra-week, but as you mentioned, a lot of fundamental factors that still look bullish. And my personal opinion is that this pullback on the dollar is likely to be met with more buyers who want to continue it. However, like you said, if it does start to break and we get some change in the wind, again, one thing that's really important with trading is being adaptable and just, kind of going with what is coming our way in terms of fundamentals and macro changes.
Exactly. So yeah, plus actually this month was everything was actually in favor of the dollar. So I'm not really surprised when I see everything very strong. At least now I saw PCE a little bit lower, but I don't think that will affect the market much. I think the dollar is still going to continue being stronger. So maybe we'll see NFP next week. What will happen? Maybe things will change.
Yeah, no, exactly right. And we do have, of course, those jobs numbers, as I mentioned, being really important, because what is kind of at the core of, inflation is having a really tight labor market like we do have in the US. the reason that continues to contribute to inflation consistently and continues to keep the Fed probably on their hawkish tone is that if everybody has jobs and everybody is, getting raises and they have promotions going on and everyone has plenty of money to spend, they go out and they spend that money, and that continues to contribute to price increases, which is exactly what the Federal Reserve does not want. So what is kind of key for NFP next week, and we'll be, of course, back together to talk about it, is, following, is that jobs number going to show any further signs of cooling? Because cooling in the labor market would probably trickle into inflation as well.
Yeah, but the thing is, that is going to be tricky. Remember, we're going towards December. So, and I think companies, they are actually hiring more and more. So that might be not good. We might see a very positive number towards December. So from now on until December, mostly if you check previously, unemployment change, or let's say NFP, mostly the jobs that are mostly positive, and that can be bad actually for FOMC, so that they will be forced to increase. You see,
Yeah.
so they will be forced to increase the rates. Unfortunately, if maybe things will change, but I don't think they will change that much. Towards December, people, they buy more. As you said, the more they spend, the more inflation is going to go up, and they are forced to hire more again. So there is a cycle that you can't just run away, unfortunately. And I saw something, maybe, I don't know if you did check about that. I saw the shutdown of the government and stuff like that in your country.
Yeah, so
That can also, it's not really good, but I did not really check that much. But I think that is going to actually push the market to go sideways. I saw it last year. So even this month, I think maybe the latest date, it's 19 October to close the government, whatever. Maybe you know it better because it's happening in your country.
Yeah, so the government shutdown stuff is interesting. I do want to come right back to that and just mention in terms of jobs and hiring at this end of Q4, a lot of
Yes.
e-commerce and retail facing companies like Amazon do a tremendous amount of hiring during this time because the demand from consumers ramps up significantly. In fact, if you look at historical returns of the stock market, they tend to be pretty good during fourth quarter. That seasonality that works against us in September seems to be coming back full swing in Q4 over the last couple of years. And I think in the last 3 years, Kenzo, we've had a really strong end of year rally from the stock market. So it will be interesting to see if we get that kind of coming back here, which I am paying close attention to as well. Amazon, like I mentioned, of course, huge mega e-commerce giant. They do a tremendous amount of hiring. And I believe that, I can't remember the number exactly, but I think it's 150,000 plus people being hired by Amazon alone to prepare for Black Friday, Christmas, all that good stuff. So wild. Yeah. So,
and Black Friday is around November, right?
Yes, Black Friday, November, and then you have the Christmas time and New Year. So it is
crazy.
Yeah, very, very high amount of consumer spending. To go back to your point, though, however, about the government shutdown stuff in terms of the dollar index, one thing that's interesting is to watch the yields world in regards to that. Yields kind of tumbling back down, but still we're hitting 5.2%, which is wild. One thing to think about here with the government shutdown stuff is basically, there's disagreements, and this is something that unfortunately is almost a consistent theme in the US politically. There's, we have the two-party system. And so they're disagreeing on things and, disagreeing on budgeting and spending and that sort of thing. And it can freeze up stuff and cause perhaps in a bad worst case, the shutdown of, government employees, which are a number of people in the US to not get paid. So that is kind of the situation. I don't know extremely much more than that, other than, they're quarreling. They're going to probably, as they usually do in these situations, they'll figure something out to postpone it till the next fight to come down the line later. But that is politics in the US in a nutshell. Not really my favorite topic in the whole world, but in terms of markets, it can be meaningful.
Okay, I understand that. That's great, man. Yeah, I see. So I think next week is gonna be interesting. This week was a bit quiet, so maybe next week is gonna be much better, especially on the economic news.
Yeah, Absolutely. So we'll be back, Kenzo, of course, together on next Friday to do some, I'm sure next week we'll have plenty to talk about with jobs numbers coming out on Friday. So Kenzo, I want to thank you for coming on the show. Before you go, let me just remind everybody in the chat, if you guys don't have Kenzo on your YouTube subscriptions list, he's a fundamental and technical trader like myself. We do this every week on Fridays. We call them Fundamental Fridays with Kenzo. Kenzo's from South Africa. I'm obviously from the US, so we are far away from one another, but talking markets every week. It's pretty cool. Kenzo, thank you for coming on the show, and we'll see you back next week.
Thank you very much, man.
See you, Kenzo. Always good to have Kenzo on, guys. And again, make sure to go check him out on his channel, Extra Hot Forex. And again, we love finding people who are macro traders to come on the show. It really adds a lot of value. I think everybody and their mother can do, support and resistance, but when you find people who can really understand the drivers in the world right now for markets, it adds a lot of value, I think, to the audience. If you guys like the fundamental stuff, can you do me a quick favor? First of all, hit the thumbs up on the stream and let me know. Let me know I like the fundamentals. Type it in the chat. If you are fundamentally interested and you're learning something here and this is of value in some way to you, please let us know in the chat real quick. Spam it for us. It'll really make our day here on the producer side as well. Silver, big push to the upside here this morning. Actually, huge push. This is great for my silver trade. I've sold some puts on silver. Let me see if I can show that to you guys. I sold puts on silver, and that is, of course, a bullish play. I'm up a whopping $145, which is not that much, but hey, it's a good trade nonetheless. I sold puts on silver. If you are not familiar with what that means, basically someone else wanted to buy puts. I sold those puts to them on the market. Options can be very tricky to try and explain to new options traders, but the long story short, I have a bullish kind of play on silver right now. If you know, you know. If you don't worry about it. You don't necessarily need to trade options, but I personally love to trade options. One of my favorite ways to approach the market. You get if you are on the sell side, you can really not necessarily make quick big gains, but you can make consistent small gains, which I'm very much for. I like the fundamentals. Thank you, guys. Several people in the chat saying I like the fundamentals. I appreciate that. Glad to know that. Again, NASDAQ also making a push higher here. You have the S&P 500. You have the US 30 all in the green here this morning. A nice recovery move from this big sell-off that we had recently. Is this likely to continue? My opinion, I would like it to continue. And, that is because inherently I have longer term bullish positions. I'm always interested. I'm always happy when the stock market goes up as I, have options trades on and that sort of thing. But in terms of short term trading, I am not necessarily bullish on this rally here this morning. And again, some of the reasons, the Fed is not kidding around, and that pressure combined with consumer demand diminishing. Yes, I should say this. You have some factors at play that are tough. Here's the thing. When you look at the indices, right, look at the NAS and S&P, contributing factors are very much bearish. The EDGEFINDER is giving a -11 on the Dow. That's a really strong bearish reading. Some of the readings for this are inflation getting us a -3. The algorithm here basically not liking that inflation figures are heating up and continuing to be a problem for the Federal Reserve, which will likely lead to high interest rates for a prolonged period of time. So the indices, for me, I can't really be buying them on a short-term basis. However, that changes perhaps next month when we start to get labor numbers, we start to get perhaps another reading of inflation. I very well could pivot bullish if we start to see the right numbers come through the algorithm. Again, this algorithm that I keep mentioning is the EDGEFINDER. It takes into account tons of data, and then it scores it appropriately and gives us a bullish or bearish bias. It's really simple for trading reference as a user of the EDGEFINDER. Basically, you can understand that the data is coming in, it's being interpreted, and it's being generated into biases. We have been really spot on with the EDGEFINDER in the last 2 months. Lots of dollar bullish calls and a lot of bearishness on the indices. both of those, as well as gold, by the way. Gold has also been a sell bias or a bearish bias. Incredibly on the spot recently has the EDGEFINDER been. And if you want a copy, again, I mentioned this earlier, but let me remind anybody who hasn't heard, we are doing, for the duration of this stream, 50% off the EDGEFINDER. It is a stream sale. It is a Friday. Get your copy. It will help you. I am very confident. It is so much powerful data at your fingertips without having to read 3,000 articles a day. So get yourself a copy. Send us a direct message right here, right now. Click this link. This link will take you to a direct message center where you can speak to a real person, ask your questions, ask for details, and get yourself a copy half off before the stream sale ends. Again, it's a great opportunity to pick it up for a major discount. And again, many traders are using it with, we've had a resounding, wonderful response from the community all along the way building this tool. And we want to get more copies out to more people. Again, we work really hard on this software. And yeah, I think it is well worth checking out to see if it's a fit for your trading, especially if you're trying to get in on the macro, the fundamental side, but you are a little intimidated by how deep it goes. This thing's a rabbit hole. So having some data and a software to help you figure that out, being built by traders who are fundamentalists, is a major advantage. It's very helpful. Do you have any book recommendations for Forex fundamentals? Honestly, the best way to learn Forex fundamentals is to, this is going to sound like I'm just promoting the stream, but come back to the stream every day. We bring on some wonderful guests all the time. Listen to the podcast that I'm on. It's called the Market Insights Market Pulse podcast. You can find it on Spotify. I do fundamentals every single day there. And actually, let me just say this. If you guys are not already inside of our Discord channel, let's drop the free Discord as well. We do a ton of free fundamental analysis breakdowns sent to you. The best way to learn fundamentals, I don't think, is from a book. I think it's from listening and working on it every day. That's how I've learned. I'm doing this because I research this every single day and I share my thoughts, and I've been doing it for 8 years. So please don't be intimidated by, what I'm talking about here. There's a lot to unpack, a lot to learn, and the rabbit hole goes deep. But when you start to pick up and understand the fundamentals, trading becomes a whole lot more clear. Again, I was lost for so long just chasing technical charts constantly until I had the clarity of like, okay, what's really moving this market? Oh, it's the fundamentals, and it's the big money watching those fundamentals and making decisions off of it. So again, subscribe, follow the Discord channel. Let's drop the link to the Discord channel in the chat. If we could grab that, if you are not already. Again, that's free to join. We do have a paid room as well, but the free one will also give you some very helpful stuff. If you're looking to learn fundamentals, please click there. Yeah, join us in Discord. Anyways, guys, back to oil here. Is this pullback an opportunity? Let's take a look at the hourly chart. Again, big rush to the upside. We broke clean out of resistance, made a pushback above it. It is a Friday, so I'm going to be picky with my trade selection here. I like this kind of retest of this consolidation that I drew earlier off the 1 hour chart. There might be a trade here. 61.8 looks pretty good. Again, just a push off of this low this morning. Oil came back into, play here, I think. Again, I was trailed out for a profit yesterday on the break of this support structure. I mentioned this yesterday. I picked up oil over here. Fundamentally, I'm very bullish oil. It's on the EDGEFINDER as a bullish reading. I believe it's still there. Yep, +5. So we're getting, if you're an EDGEFINDER user, +5. That gets us into the bullish category. We're scoring high in momentum, right? Trend, very bullish. Inflation figures, right? We're seeing inflationary pressures, and part of that is due to oil, but also inflationary pressures in general driving the oil market higher, I think. You also have, again, seasonal data suggesting that. Let's actually take a quick look. We're about to be in October. So let's take a quick look at seasonal data, see if we can pick something up here. Let's see. Okay, so seasonal data for the euro, while we've got it pulled up, euro historically bearish in October and November. Let's take a look at the indices, because this is where I think things start to get really interesting, guys. So the EDGEFINDER seasonality tab, if you have a copy of the EDGEFINDER, just go over to seasonality. This tab will let you look at historical performance for various assets during different parts of the year. So September is just bank on. We expected a pullback in September. If you watched the video that we put out on my channel right at the beginning of September, actually it was right at the end of August, I made the mention that I would probably hold off on being bullish on indices. Part of the reason, not the only reason, we also had the Fed and the inflation figures hot and a strong dollar. There's many reasons to be cautious on the indices, the S&P specifically, right? But seasonality also suggested don't be bullish indices in the month of September. Why? Look, historically, September is an ugly month for the stock market in the last 10 years, okay? Why is that? Well, you might get some slumps as people, as consumers are slower spenders, and then towards the end they pick back up, and that might be a contributor to stock moves higher. But here's the thing. Look at what happened in September. We were down 3.24%. That is a pretty substantial sell-off in the indices, and that is as to be kind of expected. We saw a bearish expectation for seasonal trends, and we got it. So looking ahead, if seasonality, which has been so actually, hold on, is seasonality perfect this year? Slight negative, very slight negative expectancy in January. That was, let's count this up. Seasonality 1 in January, seasonality 1 in February. We were expecting bullishness. We got it. Seasonality lost in March, seasonality 1 in April, seasonality 1 in May, seasonality 1 in June, seasonality 1 in July, August. Look at this, guys. We've had 8 out of 9 months have mirrored the expected returns of seasonality. What a cool thing to see. So if we're seeing seasonality come true so far this year, is that a guarantee it's going to be correct for the rest of the year? No, right? We could have 3 X's. But it doesn't mean, but it has a pretty good track record this year. Seasonality has been really on the spot for the S&P 500. October is expected to be bullish. November is expected to be very bullish, one of the most bullish months. And December is expected to be bullish towards the end of the year. Okay, so we have seasonality data to pay close attention to. We know Ivan loves his seasonality. And Ivan, what's up? Good to see you in the chat. Ivan does a lot of seasonality analysis as well. And again, I find it very, very intriguing to watch the S&P 500 the remainder of this year. So I will probably start to pivot bullish if we get big thing I'm really looking forward to is jobs numbers next week. Can we get some cooling in the labor market? That might offset the Federal Reserve a little bit and cool us down enough to see some indices relief after the recent sell-off. So I am interested. I'm very interested in potentially, if you're more of a swing investor, the question is, hey, is this a time to buy the indices before perhaps seasonal bullishness in Q4? Would be interesting, right? I generally am longer term. I have some longer term plays in the options world that I am bullish on indices. So I am poised to potentially benefit if the market does go up, but I will also look for momentum trades, which are what I talk more about on my channel because that's more interesting to people in the coming months if we do start to get those ratings. Okay. Has SPX turned bullish? Ivan, not yet for me. Again, I just mentioned big things that I'm looking for. Labor statistics next week could be interesting. If we start to see cooling there and we see inflation figures start to tick down again with that seasonal bias, that would be back to S&P Super Bowl. Look at this. U.S. oil really tanking here. Again, I mentioned I kind of like 61.8. I think this was a little bit early of a level just because we broke that level previously. So I'm gonna be cautious on this. But I like that 61.8% retracement. Guys, I want to say, I mentioned this data. The seasonality data is also available to EDGEFINDER users. Get your copy. I keep saying it, but it is because today we are doing a stream sale. We're doing 50% off. If you want a copy of the software, pick it up, 50% off. Message us right now before the end of the stream to qualify, and you can get a copy of our software. Again, we are A1 Trading, our company here. We are a software company which builds tools for traders. So we listen to the community. We listen to what you guys want to see, and we build it for traders. It's kind of a superpower to have like a team of builders where we can just build data for people. And it's a passion for us. We love doing it every day, and we want to get you a copy. So if you want 50% off, message us right now. Click this link. I'll show you what happens. Actually, I'll show you what to click when you do go to this link. So click the link. It will take you to our website's chat center. So when you click this, you're not talking to a robot. You're talking to a person. So click chat now and go right here and just do the EDGEFINDER 15% off discount, but let them know that you would like 50% off for the stream sale. And someone on our staff, a real person on my team, will help you. We've got 3 support reps at work here at A1 Trading to help traders get set up with their tools. So if you'd like that, if you'd like a tour of the EDGEFINDER, do that as well. Just send us a direct message right now before the stream ends so that you can get 50% off the EDGEFINDER. Again, that is the biggest discount that we ever do. We do not ever go lower than 50%, and we are planning on raising our prices on the EDGEFINDER. Just to be completely transparent, we have a lot of overhead costs that we incur. We have a team of 10 people involved total in what we do. We're a software company. We have costs. And if you want a copy for half off, take advantage. Get your copy before the prices go back up. So again, there you go. That is your final warning. I'll probably do it one more time just for people who missed it. But yeah, let's go to Frank. Frank is in the building, guys. Can we get some in the chat? Let's get some hello Franks going. Get some hello Franks. Maybe that'll get them pump up so you can come join us. Hey Frank, what's up?
Hey, I'm good. How are you?
I'm good. What shirt are you wearing today? Is that the A1 shirt?
Yep.
Nice.
Every Friday.
Every Friday. I gotta find mine. Mine's like stuck in the laundry somewhere. But I have 2, and they're both. That just means I got to do laundry.
Yeah,
Frank,
I know you have that faded one.
yeah, I got.
Wear.
Oh, you're right.
You
I
need
got
to buy
3.
you need to buy more merch.
Yeah, I need to buy more of A1 Trading's merch from A1 Trading. Frank, I've got to ask you some stuff here with the core PCE numbers. They weren't really that interesting, but gold is on the move up. The indices are up, and Ivan asked a question, and I think you're actually more interesting to hear from on this. Have the indices pulled or turned? They pulled back here from the lows. Are they, is the NASDAQ bullish from here? I mean, we have seasonally, I was just mentioning, I don't know if you caught that, seasonally, we're coming into the best part of the year, historically speaking, for stocks.
Yeah.
I know you took a bullish trade on the S&P 500. Are you still in it? Share us your thoughts, and what do you think?
Yeah, so I took a long trade on S&P yesterday.
Okay.
And that was after it had kind of bounced off that sort of support level. Just right above the 200-day, but there's a previous top here if you scroll back some. So just like a couple of layers of support, I guess. It wasn't like a major one, but there's just a significant drop. It hit this support level. It showed it showed like rebound from the lows. So I bought on Thursday on that candle, but trailed to break even. It barely missed my stop because it came all the way back, but just barely missed it. So I'm happy that it didn't close me out. And I think I'm just going to wait to trail until, after the market opens, because I'm sure it's going to take some pretty big swings. But PCE came in lower than expected, right?
Mm-hmm. Yes, it was.
So I was looking at that this morning. I couldn't quite remember, but I know that seeing lower PCE numbers is really good. On top of that, we saw lower GDP. So I guess what we're seeing is somewhat of less stubborn inflation. It's complying with what the Fed wants. So I'm somewhat more bullish on the indices. I know the EDGEFINDER still has it as a sell or a bearish reading.
Mm-hmm.
So overall, the longer term trend is still to the downside if we were to look for the past month or so. But I'm feeling more bullish on the indices now just because of that large sell-off we saw in the past couple of weeks.
Yep.
So this could just be a short rebound from the lows just to recover and possibly set up for another short. But, I saw the yields falling yesterday. And inflation numbers are showing us that they've declined. So I think all we need now is the jobs market to comply with higher interest rates, and then we'll probably be in the green from there.
Yeah, Frank, I think that is an interesting case study that we could do currently. If we were to break it down, bull case, bear case on the stock market, the problem is that you have a really good case for both right now. Now, the challenge about markets is that as a macro trader, as a fundamentalist, there's always a bull and bear case, so it always gets a little bit tricky. But I feel like especially right now, you have a weakening consumer. That's pretty evident that that's continuing to be a problem. You have the Fed is continuing to be a burden on the stock market. You have not necessarily stellar earnings. I mean, Apple, for example, has had like pretty weak earnings numbers. So you have some bear case stuff, and then you have the bull case. Sorry, last bear case, COT data was horrendous last week for the S&P. We saw a major move to the downside from speculators. In fact, I'll show that on my screen just to reiterate what I said earlier. If you guys want to take a look at COT with me here on the smart money tracker here, we have the S&P 500. Just to reiterate, now this is a little bit old data at this point. We do get more data today, actually. We'll report on that later today. We did that last week. We might do it again. S&P 500, look at this. So we had a major sell-off last week. We get that data again today. COT data will come out at the end of today. So that might flip. So all in all, bear case, again, I just made clear. Bull case, seasonality is in our favor coming into the Q4 era. Q4, we have tons of spending that goes on, which companies tend to really reap the rewards of, right? Christmas time, Thanksgiving here in the US. We also have Black Friday. We have a ton of online shopping that goes on, and it really acts to stimulate the economy. Historically speaking, Q4 is like the best months of the year for the stock market. You have that. You also have, as you mentioned, some figures. GDP showed some cooling. PCE here showed some cooling. And finally, one thing that I think will, for me, make or break my bull case, Frank, is next week we have jobs numbers, and then we have inflation figures coming as well. If those numbers give promise to bull case scenarios, followed with if COT starts to look bullish, it's not too ridiculous to think the EDGEFINDER could very quickly flip all the way from bearish to bullish in the span of a few weeks' time. So it'll be interesting to see if that does start to come true.
Yeah, no, I agree. I'm just trying to figure out, I guess, what would be the best approach to this. And so according to the Fed, they always talk about, or at least Powell always talks about, it's per data. So whatever they're looking at currently, like they're not holding secrets from us. They're just analyzing what's going to happen and what has happened. So I guess I would just say, despite the higher NFP reports in the past weeks, despite the higher inflation levels we've seen in the past months, look at what's current. And I think that's what the market reacts to. So overall, we've seen higher inflation, higher jobs numbers, but that's not necessarily like a going to be impactful going forward. So I guess look at all of the inflation numbers as they come in, look at all the jobs numbers as they come in. And we know that the Fed is going to work from that most recent. So just because we've seen higher numbers in the past means that, okay, well, it reacted accordingly. So I would say look at what we saw today was PCE. We saw GDP, and they both moved in favor of the optimism of stocks and gold. So saw a big move to the downside on both, and now could be time for reversal here. So what the EDGEFINDER is doing right now is, it takes in all the data as it gets it to. So what we see is still strong bearish sentiment. And I mean, I think it's justified. But we'll probably see in the next couple of weeks if the numbers are showing, more leaning towards optimism in the indices, we'll probably see the score start to decrease, and seeing this -7, or I think today was a -9, seeing that go from that to like a weaker bearish signal is a big I guess reversal idea for the indices.
No, I think you're right. And I think it'll be really interesting to watch that score as we come into the next month. Right off the bat, we flip into, October, and seasonality kind of swings back in our favor. So that already ticks down a little bit of this bearishness that we're getting in at least one category. And as we watch the jobs numbers, inflation figures, it'll be really interesting to see. Frank, thank you for coming on. I know you got things to do, places to be, that sort of thing. So thanks for coming on the show as always. And we'll see you on the next one.
Sounds good. Thanks.
All right. See ya. Guys, the man, the myth, the legend, Frank Kabibi, he is my trading partner and also the co-creator of the EDGEFINDER. Frank and I have worked on this thing together, as I mentioned, for about 1.5 years together. We're both fundamentalists, macro traders, whatever you'd like to call us. We trade based on both technicals and fundamentals. And the software that we build is pretty much our best efforts to recreate what we're looking for in the form of binary code, right? Because we're trying to simplify this stuff as much possible. Frank mentioned inflation statistics. We have jobs numbers coming out next week. Those insights, we're trying to automatically factor them into the EDGEFINDER's scoring. And that's, again, how we find our trades. I mentioned I took an oil trade this week. I'm not in it, but I am watching it. This was a bullish reading. Caught some nice trades on that. I ended up closing out my trade for about $1,600 in profit. And now this trade is pulling back. And, the question is this a pullback buy? And here's the thing. When I looked at oil, my thought process when I bought oil, I bought it here. I wrote it up. I trailed a stop below here. Price came back, trailed me out for a profit of about $1,600. Now, granted, for the hindsight pain, I think I was floating at one point like $2,800. So I ended up closing $1,600, which doesn't feel as good, but still it's a winning trade. And what's wrong? There's nothing wrong with getting out of a trade that you're supposed to get out of. What I don't like right now is that from a price action standpoint, oil is still relatively high. Can it go higher? Absolutely, it could. I'm still bullish on it. But what I don't like is that we're rejecting off of this level now that we've, again, this very same level that I put my stop loss behind, we're retesting it and we're getting major rejection off of it. Is there like a 1-hour chart trade that you might be able to trade? Maybe. But I think I'd rather wait to see this level regain strength, meaning I'd like to see this level break out and close. If we had waited for the close on this 4-hour chart or something like that, we might have gotten a little bit more confirmation to perhaps rejoin the trade, but I'm not seeing it right now. From a technical perspective, I don't love it. From a fundamental perspective, I'm still bullish oil. I have been bullish for some time. I took 2 different trades before taking my third really good winner. This one ended up being like at one point it was like a 9-to-1. It ended up closing at like a 5-to-1, something like that. So gave back a good bit of that profit. But regardless, it was a really great trade for me. I mentioned Euro as a possible short setup. I personally would like the 61.8. That would be my area of confirmation. So I'm watching for that. Indices still strong here overall. I am long on this this semiconductor ETF SOXX, which is closely tracking kind of the NASDAQ. S&P 500, again, interesting there. Silver, I don't know if we mentioned silver, but look at silver today, guys. Silver's flying high, 23.36. Found support around this area yet again. Really strong area of support there. Nick, where do you get your fundamental info other than Forex Factory and the EDGEFINDER? So what we've done, Cold J, is we have a wide range of places that we pull the data for. One of our first obstacles with the EDGEFINDER was, okay, great. How do you get all this crapping data into one spot? So we have a huge, like ginormous code thing, that code block that basically pulls data. So there is no easy answer. The short answer is fundamental data comes from everywhere. There's so many different places to go pull it. The EDGEFINDER, one of the underappreciated components to the software is it pulls that data for you. Again, that is what you're paying for. When you buy a product like ours, you are paying for the massive convenience of us doing all the heavy lifting to pull that data into one spot for you so that you can look at it. I mean, that is the first half. The second half is the algorithm that it runs on, which scores everything that is pulled in. The EDGEFINDER has, it is our top selling product for a reason. It is a major convenience software as well as a confirmation software. It pulls in data for you from all various places because there's not really an easy place to get a ton of data from one spot. You have to go pull it from a million places and click through a bunch of articles and click through a bunch of pages. It's an egregious task. That's why we built the EDGEFINDER. It pulls data in automatically for us so that we have to spend so much time doing that. And then it also interprets it. The algorithm that we've built interprets the data that comes in and helps give us that confirmation for our trades. The goal of trading is not to spend your whole day reading articles and digging through data, but that leaves most people unable to trade with fundamentals. So we have, as a company, we're trying to bridge that gap. We're trying to let more people use fundamentals, which are so powerful for trading, without having to spend all day long digging and sourcing data. I used to do some of this stuff by hand. It was horrendous. It was the most tedious task to go right into my Google spreadsheets, what GDP was looking like and what inflation was looking like and what was the change and what was the unemployment. I used to do that. Never will I do that again. After building the data, again, you build it once, you build it right, and then it's really powerful. EDGEFINDER is going to be the #1 most used fundamental tool in the future. I certainly hope so. That is the goal. Obviously, like I said, we're all in on improving it and building it better. So if you guys would like a copy, last call on this, we have 50% off available. If you're somebody who has watched the streams for a while and you are thinking about getting a copy of the EDGEFINDER, do not wait. If you've been thinking about it, I'm telling you right now, transparently, this is the best price you're going to get on this day going forward. There is not a better price that you're going to get for the EDGEFINDER than this, because we are planning with all of our new updates and data loads. There's a large overhead cost to running a software business. Our prices are going to go up. We are catering more towards a heavier product, and with that comes costs. The Bloomberg terminal is like $15,000, which sounds crazy, but their costs are tremendous. They cater towards large investors. We are trying to cater to the regular investor out there, but there's only so much we can do before we raise our prices. So if you would like a copy for 50% off before that happens, I promise I'm not just saying that to try and get you to buy it. We really do have a lot of overhead costs, and we do plan on repricing at some point. So do not miss the 50% off. It's the best price you're going to get. Click the link in the chat right now. If you do click this link, while you do that, I'll show you what happens. You click that link, it'll take you to our website where you can have a conversation with someone on our staff. Click chat now, click EDGEFINDER 15%, and let them know that you'd like the 50% off stream sale, and we'll get you covered. We'll get you set up. Okay. You can also click tour the EDGEFINDER if you have some questions, if you'd like to speak with someone. This is a real person on the other end of this. It's not an automated software. So take advantage, click that link, and there you go. All right, guys, I am not going to make it to the end of the stream today. Unfortunately, we ran out of guests. We ran out of stuff to talk about. It is Friday as well, and I've got some things to do here in the office. So please note, we do have U of M consumer sentiment. Will it move the markets? Somewhat, but clearly we're going to probably miss that here. If there's anything super interesting, I'll cover it on Twitter or in our Discord or our Telegram. Last thing I'll say is if you're not in our Telegram channel for free, you can join it in the chat right now. We'll drop the link to our Telegram. And if there's anything super market impacting like COT data later, we'll be sharing some stuff and updates there. Click this link, join us in Telegram. Have a wonderful rest of your guys. I'm losing it. Have a wonderful rest of your day, guys. We'll see you back on Monday. See ya.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you create a new trading account with ACAP, you can get tools like the EDGEFINDER completely for free. Check the link in the description for more information. From all of us at A1 Trading, have a great day, and we'll see you next time.